Now, Fox 54 Connected.
Hi, welcome. I'm Jackie Lynch. I'm here with Paul DaCosta from DaCosta Insurance Services. Hi, Paul.
Hey, appreciate it.
Glad to see you. We have some great questions about Social Security, Medicare, and prescription drugs. Let's start with prescription drugs. Is there something new going on with the program this year? What is it?
Sure. The biggest thing that you're going to see this year is that the prescription drug deductible went to $590. Some people last year didn't have a $590 deductible.
Okay.
Their drug plan didn't have one.
Okay.
But this year they do on tiers 3, 4s, and 5s. Now it might be a little different between certain plans, but you're still going to have that deductible. So on a tier 3, 4, 5 drug, you're going to have to pay that deductible first,
Okay.
and then pay the copay for what's left of the cost of the drugs. So
Okay.
that's important to know that. The other big thing is that some drugs were a tier 2 last year, they might have been moved up to a tier 3. So you need to know what your drugs are and where they fall. So
Right.
you can figure out your calculation. The best thing is once you spend $2,000 out of your pocket for your expensive drugs,
Right.
you are done. You have zero cost from you from there on out.
Right, and you were saying some drugs could be as much as $18,000.
Oh yeah,
or
some
more,
drugs are
so
super expensive.
You'd
yes.
get it paid off just like that?
Yep.
Well, that's a good thing. So when should people start looking at Social Security and Medicare for themselves?
Yeah. Well, people can't start to take Medicare unless they're a disability till age 65, but Social Security you can start to take at 62.
Okay.
So you really need to do planning. A husband and wife, whose check is going to be bigger?
Okay.
That person you want it to go for as long as possible up to age 70, because if you wait to take your Social Security check at age 70 compared to age 62, it could be almost half the difference. Okay?
Oh, wow.
So that adds up when you talk about you live to be 85 or 90, you got 18, 20 years of you took a decrease of $700 in
Yeah.
payment. It's a lot of money. So you really need to know these numbers before you say, oh, I'm just going to take it.
Right, and you were saying that let's say my spouse
Mm-hmm.
were to pass before me, then I would get their Social Security.
Correct. So if the spouse that's check is going to be bigger, you want to be able to hold that off till 70, because if that spouse passes away, the other spouse would be able to claim. Okay.
See, I didn't know that.
So that's important.
One last question. What is IRMAA and how does it work?
Okay. So IRMAA is called income-related Medicare adjusted amount. So what that means is simple. If you pay your Medicare Part B right now is $185.
Mm-hmm.
If a husband and wife or a couple file taxes and their taxes are over $200,000, $212,000, you would pay a penalty
Okay.
or an adjustment, and you go up to like $265 or something like that. Okay. So as your income grows, you have to pay more for your Part B. If you don't make over that $200,000, it's not a big deal. But what a lot of people don't realize is that if you sell a piece of property and you have $180,000 profit, that's income for that year, and they look back 2 years. So it's important to know that.
Okay, great. Thank you so much, and we will see you next time.
Hey, thank you.